If you start trading and master it, you can create a massive income generating machine for yourself. But if you don't have the right foundation, you can spend years losing money trying different things to figure it out, only to find yourself more confused. Because the trading world is confusing, with millions of people saying millions of different things. Okay, I've been trading for over 7 years now, and I'm completely self-taught. So whether you have some trading experience or you're brand spanking new, what I'm going to show you today is a simple process that I wish I took from the jump to start doing things properly. I'll show you how to rewire your mind to think like a trader, all the softwares that you're going to need, how to do simple charting, understanding trading math, all the custom tools that I've built over the past several years, and how to gain access to capital starting with a small amount of money, so that by the end of this video, you'll have a clear path to master trading and hopefully create that income generating machine for yourself. All right, so before we start, I want to do an exercise. So I have a coin right here. Heads is going to equal $300 and tails is going to equal $100. If we flip the coin 10 times in a row under the same conditions, we'll know that roughly we'll get 5 heads and 5 tails. And that average will still statistically hold true even if we get 3 tails in a row. Now, knowing this, it wouldn't really be logical to get emotionally invested in the outcome of each coin flip. And we know that we'll get approximately 5 tails for $100 each, which will leave us with a net gain of $1,000. Now, the losing trader mindset is to put importance into the outcome of each individual coin flip, whereas the pro trader mindset instead will focus all of their effort on keeping the same conditions for the coin flip and tracking on average how much they make after 10 coin flips. Now in trading, this coin flip is going to be equivalent to our strategies and practices. It's all going to come down to winning probability. If you go into trading understanding this exact principle, you're going to be ahead of 80% of other traders when they get started. But that only takes us so far. Now we have to learn how to actually implement this into a trading market. All right, let's get into lesson number 2, where we're going to talk about charting and software. So today I'm going to talk about 3 foundational softwares where basically you can get started trading using these things. First thing is going to be TradingView. Second thing is going to be Excel or Google Sheets. And then the third thing is going to be an exchange. Okay, so personally I trade cryptocurrency, so I'm using either Bybit or Femex as an exchange, but depending on if you're trading Forex or whatever, we just need a means to actually buy and sell. We don't really need to focus on this until more towards the end of the video. All right, so let's hop over into TradingView. You'll notice my chart just has candlesticks on it with nothing else. Okay, this is a big thing for you to understand. And this is something that I've noticed throughout my trading journey, watching people who haven't succeeded and who have succeeded, and what's really helped me personally. Okay, there's so much that you can add to your charts.
It's been a long fight. It's been a long fight, and I just had to have a warrior spirit.
Okay, there's so many indicators that we do use once we get more advanced, but you have to understand most people start with a process that doesn't work, and then they add extra stuff to their chart in order to try to make it work. Whereas the successful people, and the right way to do this is to have a very simple chart, understand what moves the markets, how to actually trade that, and then as you're starting to see success with the fundamentals of trading, you're adding more to it to complement what already works simplistically. If you're doing the opposite, you're already wrong. You're going to confuse yourself with something called paralysis by overanalysis, and this is how people run themselves down a rabbit hole of never actually being able to understand how to trade. Do not do that. Start simple. I'm going to walk you through the entire process to understand exactly how markets move, how we're going to read these charts, and then we can add stuff as we go. Promise me that you're not going to do that. If you have a crazy chart with indicators all over it, wipe it clean and follow along with this. All right, so right here, I have my chart pulled up. This is on Matic. So I personally trade cryptocurrency. The reason I trade cryptocurrency is because the market is open 24/7 and it allows me to use high leverage. So I don't have to use a lot of my capital to take really large positions when I'm trading. Okay, I'm going to explain this in way more detail in lesson 4, so hang in there. All right, so here we have our chart frequencies. I'm gonna go over really quickly what these candlesticks mean. The bottom of this box is where the candle opened. This wick is the lowest point that the price moved in the past 5 minutes. This is where the candle closed, and this is the highest the price went in this 5-minute increment. Same thing with the orange candles. Price opened here, closed here, and then the highs and lows are still the same. This is a simple standard way for us to see where the price is moving. All right, but I still think that most traders, honestly, even if they are trading, don't really fully understand what moves the markets. So, and what moves these candles are buyers and sellers on the order book. So we can see up here, these are all sellers in red, and down here, this is the bid side where the buyers are. And in order for this candle to move up, these buyers who want to buy into the market have to take orders from the these sellers up here. So if I wanted to enter the market right here, and the first available order for me to sell is going to be down here. So if there's more buy pressure in the market, it's going to start clearing out all the orders at this level. And then the new current price that you can enter is going to be somewhere up here as the candle increases in price. And the same thing goes in the opposite direction. And the quantity of orders at each price slot here is something called volume. This is people quite literally interacting with the market. Now, something that you have to keep in mind is when we're looking at charts, we're seeing the visual representation of mass human psychology. So all those people making buy-sell decisions, institutions, algorithms that are all involved with the market, okay, we're able to see those actions collectively and start to use patterns to make sense of it. And so all we're really seeing is a battle of supply and demand on our chart. As the supply increases, if the demand for that at higher and higher prices starts to slow down, the price will retrace until the demand starts to outweigh the supply. And then once the demand is back, the price will continue to move up. So all we're seeing is a big increase of supply and no demand, and then the demand coming back. All right, and one of the key premises of trading is predicting where those supply and demand imbalances will happen before they happen, so we can enter the market and benefit off of those changes. So if we can figure out that, say, this area is going to be a potential reversal area where the demand will start outweigh the supply, we can buy in here, wait for the price to continue moving, and then sell it for a higher price. And that's how you make money as a trader. You're basically trading in the supply and demand and trying to outsmart an entire ocean of other people who also want to buy and sell these instruments for different reasons. So predicting these levels is obviously the golden answer of trading. If you figure out a way to do that and you figure out how to position yourself in the market, then you can make consistent profits. One of the most effective ways to do this is by using trends. So, okay, we can start to anticipate where the demand will be higher than the supply, or the supply will be higher than demand, by using trend lines. So a trend constitutes of a high, a low, and then a higher high. This is what's required for an uptrend. Okay, same thing for a downtrend. If we have a move with a lower low, a lower high, a secondary lower low, and a lower high, that constitutes as a confirmed downtrend. All right, and we can use trend lines to start to look at these important levels. So if I click a line from this low all the way up to here, you can see the price is bouncing off of that demand outweighing the supply zone until all of a sudden the demand is no longer there and the price drops through this level. And now we have that trend broken, which is going to lead to a new potential trend. All right, so here's another example. So we have supply outweighing demand here, as well as supply outweighing demand at this level. So if we draw a line from here, and then we take a parallel line and we go to this lowest point on the other side of this move. If we go ahead and play this chart forward, we can predict roughly where this price will end up going through before the demand outweighs the supply. We get a response off of that trend, and then we end up making a move higher. So just like our coin flip, we understand that we could get tails and this would keep moving, or we can get heads and we can be right about predicting that supply demand zone and have an opportunity to take a trade. So if we decided to buy, say, 1,000 units at this level and then allow this to play forward, okay, we can end up selling it up here to make a nice profit on the trade. However, one of the biggest mistakes you can make as a beginner is entering your trades, number one, without a stop loss to manage risk, and number two, with a random amount of units. Okay, because 2,000 units of Matic that we got for 83 cents done on something like Ethereum, which costs $2,400 per token, you can see the position size is going to be vastly different. Okay, we just lost theoretically $23,000. So instead of potentially risking $10 on Matic, we just lost $23,000 theoretically on Ethereum. So every time you're entering a position, you need to know where exactly you're entering, where you're going to be taking profit, and where you're going to be selling and leaving the trade if we end up landing on tails, if the trade ends up going against us, so that we can contain those losses. So say, for example, we wanted to buy here, we wanted to take profit here, and we wanted our stop loss to be placed here. Say we wanted to risk $50 on this trade. We need to enter at this specific level with this exact amount of units in order to risk $50 and attempt to make $210. Once again, our heads and tails, the $300 on heads and the $50 on tails is only going to be possible if we're setting our trades up this way from the jump. And here's another big stupid one that I hear a lot of times from other trading influencers where they say, yeah, you know, if I was really confident about this trade, so I took more size on this one, and I wasn't so confident on this trade, so I took a little bit less size. If you start deciding which setups you're going to put more size into, you're going to directly start making decisions based on your emotions. Okay, instead of following a process and following your simple strategy where it's either I'm taking the trade or I'm not, you're deciding I like this one better, so I'm going to put more money into it. Okay, if that one goes against you, you're going to start thinking, well, oh, the time that I thought the one was going to work out, I put more money into and I lost, so I'm going to find the ones I don't like so much and I'm going to put more money into those, and you'll start running yourself into this stupid rabbit hole. Okay, don't listen to people that are saying things like this. Trading is supposed to be very systematic. The less emotional decision making that you need to make, the more effective of a trader you're going to be. And the way you do that is by following your exact strategy every time. I can't hone in enough on that. Okay, because the closer you can follow your process, the closer you can figure out of 10 trades, how often does my trade hit this full stop loss value? All right, because then it simply comes down to a combination of win rate and the risk factors on your trade. So when I say risk factors, if we consider your risk, which is in this case $50, one risk factor, if this moves up by 3x your risk, that is 3 risk factors. We make $150 on this trade, because then it just comes down to different combinations of your winning percentage, or the amount of times that you are right versus those risk factors that you're making. And you can see, even if you're only right 30% of the time, if you have a 1 to 3 risk reward where you're risking $50 to make $150, you can still come out of that profitable. Okay, so the goal of trading is to use your practice, use your journaling to take more winning trades so you can be more at, say, a 50-60% win rate at a 1 to 2, 1 to 3, and you can be sitting right in this pocket here. And that's with most traditional trading systems, how you could hit that sweet spot and be able to make consistent profits over time. Get this whole notion out of your head that trading is about being right or being able to predict what's going to happen. Okay, any trader that's saying, oh, I lost a trade, so that's automatically bad, don't listen to those people. There are good trades and there are bad trades. If you make a whole bunch of money on a trade that was really, really risky, even though you made money on it, that's still a really stupid bad trade. If you lose money on a really good setup where you're putting yourself in a position for one of those coin flips, that is a good trade whether you make money or don't. Make sure you get that through your head and don't listen to these other idiots online that are going to say things like this. All right, let's move into lesson 4, and I'm going to explain to you access to capital in using leverage, which is going to allow you to start trading with a lot less money, but also if you know how to do it properly, it's also no more implied risk. So let's go back to our Matic example here. By the way, if you want to use this position size calculator, go into the description and join our Discord. All right, we have a whole free section of our Discord where you can chat with other traders. Okay, we put out trade ideas from the private side of our trading team that you can follow along with to get yourself started. But if you go into this resources and learning section here, you can click on this link. And not only are you going to get all my trading view indicators, but you're also going to get a ton of other resources that we put together in a one-stop shop. So you have everything that we talk about in other videos and to get yourself started trading the right way. So let's go back to our Matic example. Say we wanted to buy here, take profit here, and sell here. Say we're beginners. We want to risk a really modest amount of money. So $25 on that trade. Okay, even only risking $25 on this trade, we're required to enter still with 1,831 Matic tokens at a price of 0.83, which is going to cost us $1,529. So once again, risking $25 requires us to have $1,500 worth of capital without the use of leverage. But say we add 10x leverage to this. That will drop the capital requirement for the trade down to $152. All right, so for example, if I go over to Matic and put in my 1831 units, you can see without leverage, this is going to cost me about $1,400. If I increase the leverage, say to that 10x leverage, now the cost of this position is going to be $145. But this is also going to increase the amount of fees that you need to pay on the trade. So if you're paying a 2% commission, that 2% commission is still going to be coming off of the total actual cost of the position, not just the cash requirement to enter it. So that's something to keep in mind for moving forward. Okay, but leverage is going to allow you to take really normal size trades, and it's really no more risky so long as you're still calculating your positions to risk a certain amount of money. All right, but you shouldn't even be using an exchange or leverage until you complete lesson 5, which is what we're going to talk about next, which is going to be journaling, practicing your trades so that we're able to scale our accounts. Okay, so say we've taken our trade risking $50, we make a 1 to 3. So we made $150 on this trade. You should immediately be screenshotting this trade to track it, taking a screenshot of that chart and journaling everything, the date of entry, the ticker, whether it was a long or short, how much money you made or lost on the trade, and any notes that you want to take on the setup. That way you have a log of all of the decisions that you've made, all the trades that you've taken, and you know over a certain amount of trades, over a certain amount of coin flips, how much money you actually made, what percentage of the time did you make or lose money, and how many total trades did you take. Okay, so I built this custom spreadsheet as something very simple that you guys will get access to if you get this Inevitrade Trader suite of tools. This is the only way that you'll be able to have the proof of concept and know that your trading is actually working out, because until you have the proof of concept, until you know that your trading is working, it doesn't really make sense to hop onto an exchange and start using real money if you don't have the proof of concept that your trading works. If you're not practicing and being profitable with your strategies, then you shouldn't be putting money into the market at all. That should be the last step that you do. Okay, what I will say, once you are proficient and you are starting to see some results, don't hang out on the sim account too long, because it's going to make you complacent and it's not going to get you set up for success. Trading the real markets, trading real money with real money on the line is much different than trading with practice accounts. And a good way you can do this a lot faster than just waiting for the market to set up with real trades is something that you've seen me doing throughout this whole video, which is this bar replay button right here. So what I like to do is, regardless of the system I'm trading, I can click on a random coin. I can go back, say to where I don't even remember, like I'm not really looking at the chart, and I can just click in a random area. All right, and once I've clicked in a random area, I can just be doing my simple analysis, right? So you can be following your strategy here. You can play this trade forward, seeing what would have happened. So say we drew our analysis here. If I wanted to use my position size calculator, I can put my entry here, my take profit here, my stop loss outside here, put $100 of risk, hit apply. This will show me my quantity 3.5. So then I can go in here and type in 3.5 and hit sell. All right, so say we're up $266. We take profit off of there. Okay, so now you take a screenshot of that. So then you go over to your journal, you put in the 266 over here. And I designed this so that this will auto update the total for everything. You also have a trading stats sheet. So you'll see on all your longs and all your shorts, how you're doing on each thing. And then once you have that proof of concept, like I said, you can head over into the exchange. All right, and these principles are exactly what we do in the private side of our Discord community. Okay, we have people mastering all these systems that me and my team have put together. All right, and we make sure that they keep their framework focus on these principles. You can see Crew with a nice TCL max win. I need a max win. Okay, another really nice win here. Landon's absolutely crushing it, making wins left and right. Really, really high winning percentage. Okay, 4 out of 4 right here. Okay, Connor says massive shout out to the Inevitrade team. In 10 short days, 7 trading days, I've officially doubled my trading account thanks to the TCL Max system, which is one of our trading systems that we teach. So shout out to you, Connor. And shout out to the Inevitrade team for all the system development. We have so many crazy things. I mean, this is just us scratching the surface of the basics of trading. This is why I have a passion for trading, because you can get so deep, it's so interesting. And if you master this process, then you quite literally can create an income generating machine for yourself, where you can travel the world, you can live wherever you want, you have time, location, and income freedom, and you can scale your income to basically however much you want. Okay, if you're still here and you found value in this video, make sure you hit the like button, subscribe to the channel if you like trading and investing, all right, and you want some no BS trading education. All right, and if you had an epiphany moment in this video where something really helped you, let me know in the comments. It feels good to be able to read that I'm helping people out and I'm helping people learn along their trading journey. But anyways, guys, that's really all I have for today. Until next time, guys, I will see you all in the next video.